crypto markets are going to go from, I think, $2 trillion where they are today to something like 100 trillion by maybe 2032. That's an enormous rise, and we won't capture it all by just focusing on Bitcoin, Solana, and Ethereum. We need to be able to move further out the risk curve. This is what hedge funds are really good at. They do this. They spend all of their time looking for alpha, looking for opportunities. So I find speaking to hedge funds super rewarding because these guys have capital on the line. They not only have their own personal capital, they also have investor capital. So their job is to focus on the best opportunities in a risk-adjusted return basis. Now, one of the things that, I too was class of 2013 with Bitcoin. One of the things that I saw in it immediately was the game changer in terms of both capital formation and kind of aggregation of interest of people is the behavioral economics side of this thing. Because, you bring people into a network and the token value goes up because of Metcalfe's law, increases the value of the network.
Raoul Pal, CEO of Real Vision, said he'd expected a big push for a crypto subsector. He said gaming apps are approaching a new phase of adoption that could help drive growth in the digital asset class. When we start to see direct user apps, we start to see gaming. It starts to happen. He thinks it's going to be a big push. Paul adds that the expected surge in cryptocurrency adoption won't be limited to blockchain-based gaming. He says he expects crypto apps to see a massive surge in user adoption in the coming months. But we have a lot of these consumer apps. The old move from Web 2 to Web 3, or from the old internet to the new internet, this will be done on a massive scale, and he believes we're going to start getting this cycle going. Paul also believes the whole space is going to go way up, predicting a 10x move for Solana and a 4x or 5x rally for Bitcoin from current prices. He also says that a massive swap will happen, likely involving another Layer 1 blockchain. There's always another Layer 1 race, which is the first step when you don't have proven network effects. According to Raoul Pal, you can still make millions even if you have missed the move of Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
Space today is $2 trillion. I think it's going to $100 trillion. That's just the extrapolation of market cap or the log regression channel of the price of Bitcoin. You can kind of back it out in a number of different ways. And maybe I'm wrong by 50%. It goes to 50 trillion by 2032, 2034, something like that. And so the job, therefore, is to ride that trend. It's not, because one thing that people don't understand is it will not be a $50 trillion Bitcoin world. Bitcoin might be 10 trillion. Well, there's going to be 40 or 90 trillion of value created somewhere else. And that's what hedge funds can do, because that's a hard job. You need to be super focused to think, where is the really big value accrual? Like you did with Solana. Classic example is you see something really early stage and the value accrual has been vast from that and it's not over. And that's what I think the bigger opportunity. If people zoom out, stop worrying about the cycles as much and just think, how do I capture that trend? Because I think that is the largest, fastest accumulation of wealth in all human history if that plays out.
Paul believes that cryptocurrencies represent the biggest macroeconomic opportunity of all time. Paul argues that the continued depreciation of currency by central banks, coupled with the rapid adoption of crypto technology, has created a unique investment opportunity. This could lead to unprecedented returns. He predicts cryptocurrencies will grow from $2.7 trillion, where we are today, to, say, $12 trillion by the end of this cycle and $100 trillion within 10 years. He emphasizes the potential for massive wealth accumulation in the shortest period in recorded history. Paul highlights the correlation between global liquidity and the price of Bitcoin as a key indicator of the macroeconomic forces driving the cryptocurrency market. Paul discussed the concept of crypto seasons, where each cycle is characterized by distinct phases of market behavior. He believes that we are currently transitioning into the summer of crypto, a period where altcoins typically outperform Bitcoin and the market sees significant growth. Pretty soon, like next month and a half, we'll start hitting the banana zone. Paul refers to the potential for explosive growth during this phase. He says that when the zone hits, things will get crazy. Paul warns investors not to get carried away by the hype and make irresponsible decisions. He advises against using leverage, keeping the majority of your crypto holdings among the top 3 to 5 market cap tokens, and not allocating more than 10% of capital to high-risk altcoins. Paul advises not to get carried away by nonsense because your friends are making money or because you see a guy making money in a meme coin. Paul warns, highlighting the importance of a disciplined investment approach. As the cryptocurrency market continues to evolve, Raoul Pal's insights provide a compelling argument for why investors should consider allocating a portion of their portfolio to this growing asset class. By understanding the macroeconomic forces at play and adhering to a responsible investment strategy, individuals can have the opportunity to participate in what Paul sees as the greatest macroeconomic opportunity of all time. Paul takes an in-depth look at the current state and future prospects of Solana and the broader cryptocurrency market. Reflecting on Solana's recent price movements, he notes that despite significant volatility, the asset has shown resilience. He highlights 2 major developments that have increased his confidence in Solana. NFT compression. This innovation enables massive scaling of NFTs at low cost, opening up many use cases from ticketing to derivatives contracts. Fire Dancer, technology that enables Solana to reach unprecedented transaction speeds of up to 1 million transactions per second TPS. This scalability positions Solana as a leader in blockchain technology, essential for its mass adoption. Paul says he is heavily invested in Solana with 90% of his cryptocurrency allocation dedicated to it, reflecting his strong belief in its potential. He highlights the importance of focusing investments when markets are highly correlated, as is often the case in the cryptocurrency world. Paul uses chart analysis to support his bullish stance on Solana. He highlights a perfect wedge pattern on Solana's price chart, which historically indicates strong bullish breakout potential. He further notes that Solana's low volatility indicates that a significant price move is imminent. He draws parallels with Bitcoin, showing that historically, Bitcoin's low volatility has preceded substantial price increases. Paul suggests that Solana is primed for a similar pattern, potentially outperforming Bitcoin and Ethereum in the near term. Paul expects the market cap of altcoins, excluding Ethereum, to potentially increase 10x during this period. He advises investors to maintain a disciplined approach, keeping the majority of their portfolio in top cryptocurrencies like Solana, while allocating a smaller portion to high-risk, high-reward opportunities. Paul emphasizes the importance of patience and long-term strategic thinking. He highlights typical seasonal trends in the cryptocurrency market, noting that the months leading up to the U.S. presidential election are historically strong for Bitcoin. He advises investors to expect corrections in volatility, but to stay focused on the overall trend. Paul advises investors to stay informed and disciplined. He highlights the importance of this period in the cryptocurrency market, seeing it as the beginning of a transformative phase that could lead to unprecedented wealth accumulation.